I see.
Another risk is that they get irrelevant. So they still keep the Switch, but people say, I have my iPad, I have my smartphone, I have my computer. I don't need this Switch gaming experience. I can play all on my mobile.
Mm-hmm.
They are, in this sense, if you compare it maybe to the gaming industry of the 1980s, a bit less relevant because you need an initial investment to buy a Switch. It's not cheap. It's like $300. Then you have to buy games that cost $60 or $50 and stuff like this. So you have this financial hurdle.
Before we begin the podcast, have you gotten your free ebook? It's called the Build a Six-Figure Portfolio Guidebook. Now, inside it, we share with you the tips and tricks to bring your stock investing skills to the next level. The best part, it's only 10 pages long and it's totally free. Whether you're on Spotify or YouTube, the link to download is in the description, or you can go to www.firl.co/FREE or www.firl.co/free.
Hello, and welcome back to the FIRL podcast, best place for long-term stock investors. MJ, are you excited as I am?
100%. Very, very honored that we can have the guest today.
Yes, and we are so honored because it's going to be our first overseas guest. And he comes from a country where Oktoberfest is celebrated, just to give you guys a hint. I love bratwurst as well. So this evening, we're going to have Tilman Versch. He hosts a very, very interesting website and he runs this full time. And I'm not going to spoil the surprise, so I'm going to let Tilman. So Tilman, welcome to the FIRL podcast.
Thank you very much for having me on. It's an honor to be here and it's great to meet you two guys via Zoom and record a great podcast for today.
Yeah, great. Thank you. I discovered Tilman because of social media. So we have YouTube and to thank for that.
The algorithm,
MJ,
yes.
Yeah,
absolutely.
The algorithm. We said that great value investors attract each other or great content creators attract each other. And I'm a great fan of Tilman's work. Go check out his channel. We'll get him to introduce his channel at the end of the show so that you can give him a shout out. You can follow him and subscribe as well.
Thank you.
Yeah. So Tilman, perhaps a little bit about yourself. Let's get to know a 15-year-old Tilman. What was he like in school? What interested him? Was he athletic? Was he more of a passive guy? Was he a more studious person?
Not really happy in school, and at this time I played too much computer games, I think, and was just like doing okay in school and not really athletic. So no connection to stocks anyways, but just like maybe I have an investment in Nintendo. I've also covered Nintendo on my channel. So if people like computer games, this might be an attachment I could make to my 15-year-old self, but yeah.
Yeah. Actually, that MJ will be a great fan of it. He loves computer games. Are you into Dota, Tilman?
I'm just like I'm still playing the same games as I was 15. I'm just Age of Empires 2 fan, like the new edition. I play some Nintendo, and that's it. I'm just like conventional in this sense. There's nothing special about my gaming. Okay. So
great.
I'm too old for the new games now. Just kidding.
Okay, a little bit too taxing, right? Yeah. So I understand you studied geography and European I hope I pronounced this correctly. Ethnology. Yeah. And you did politics. What got you interested into that in the first place? Could you share with us why you did that?
At this time, I was living in the rural side of Germany, so somewhere in nowhere. They call it Badisch Siberian, which is related to Siberia because it's somewhere in the north and nobody lives there. And I was interested in politics and looked for a way to engage with society. And as I was 17, I started there a green youth group and connected people. and was interested in the topic of politics because it also opened me a different world. I could travel to different conventions, could see other people, could see the guys and girls or women and men you could see in TV, get to know the parliament and get to know politics. So it was a quite interesting opportunity. With the studies, it took me to Berlin, like coming from the rural side to the big city. So it was a bit of a cultural shock and but also interesting. And I did study geography because it was like I wanted to go to Berlin, and it was harder to get into the city with other subjects like geography, and geography was the way to open it. So it also was quite interesting. It's more like, it's a bit like a groundwork for understanding the world, which is also helpful to build investing capabilities on it.
That's
so
right.
You have to think about climate, you have to think about soil sometimes, which is an odd topic, but it's also the source of civilizations. You have to think about cities. You have to think about economic developments. We had one professor, he was specialized with his team on the rising of Asian countries. So he did some studies about Malaysia, Japan, and also Vietnam as they were getting to growth, how they did it, what were their approach for. Whereas you had to think about creative industries. So it was a broad studies. It wasn't really related to investing because it was more a bit more on a macro level. You don't have the companies you're focusing on. Maybe you have decision-making processes of company you were looking at, but yeah.
No, it's interesting. I mean, what's your perception prior to that of Asian countries? I mean, what I want to see from a European lens, what do you guys see Asian countries when you guys were growing up, and has it changed significantly?
It has changed. It's sadly connected with a lot of fear because there's this China discourse, like China's taking over the world. And it's still, for me, Asia is still quite unknown because the orientation goes to the US for many Europeans. So the focus is on the US and maybe South America, and there is no direct relationship with Asia. So I think the knowledge about Asia is quite limited in Europe. And there's no such deep knowledge about Asia. So it's good to be talking with you and learning more and sharing perspectives. And but if you think about Europe and Germany especially, I think Germany is like an exporting nation. So there is a certain interest. And I think also our growth in the last 20 years profited massively from China because there were big investments by the car industry, by other construction industries. Germany is really this so-called Mittelstand and Weltmarktführer. Like Mittelstand is hard to translate it because it's like small and mid caps, but it's the German version of it. And niche player that have a leading world position, like we have around here in Baden-Württemberg where I live. You have EBM Papst, which isn't listed. So it's a company that makes fans. You put these fans into industrial buildings, for instance, or into cooling.
The huge ones, is it?
Yeah. No, it's not. No, like the fans for industrial buildings or elevator fans, different fans to change air and also to cool stuff. And they are leading in this perspective. There's a fan valley. And we have in the south, we have Herrenknecht, it's called. It's a construction firm. They build this tunnel building machines, like machines that are as big as some houses. And they built these tunnels in Shanghai, in different regions. They built these tunnels through the Alps. And they are quite fascinating because they can dig and then also put cement plates on the wall and construct in the same perspective. And it's fascinating what's around here. Yeah.
I think that company may have been the one that helped Malaysia build. We actually built how would I call it? Storm diversion drain plus a highway. And it actually used a TBM, tunnel boring machine, and it actually had the capacity to actually build the concrete plates to actually, while it was boring it. I'm not too sure what was the name of the company. Maybe I should, go find out and let you know whether it was. But we use a lot of German technology over in Malaysia, Tilman. I mean, like Siemens is very big here. Even I know Alstom is more French now, but yeah, we do use a lot of. I mean, we love German cars. Anyway, regardless of where we go, we just love German cars.
Yeah, and the key thing about German cars in Malaysia is that it's considered kind of like an upper middle class car.
Yeah,
I know that's a perception that's not necessarily true in all of Europe, but certainly in Malaysia, that's what we think.
Yeah.
I think it's also the way German car makers position themselves to make more selective cars, so you could customize them and not the mass production. Because
That's right, yeah.
If you have European incomes, you have to go into the higher premium brand space. And down here, like if I go 500 meters, or 1 kilometer is the headquarter of Daimler-Benz, so Mercedes is there. And down there, this road, I can go like 2 kilometers and there's Porsche headquarters.
Wow.
So I'm between car makers.
Did they give you a discount because of your proximity to them?
No. I have to admit that I don't even earn a car. I have a bike and a public transport card. So I'm just like not the typical car customer, and also not an investor, because it's sometimes a hard business to invest in. But
Yeah, I've been to Zurich many times. I've been to Berlin, sadly, only once. But I know a lot of my colleagues when I was working in Zurich. They don't own cars because the public transports. I envy you guys because you can take a tram, you can take public transport is so efficient. It's not like that here. Public transport is not as efficient as what we get what you guys get in Europe, and I think that's why in a way you can get away with not having a car, and it's more cost efficient. It's more environmental friendly, and I think, when do you actually need a car? Why do people buy cars in Germany, if you don't mind me asking? Is it more for prestige? Is it more for,
in the denser regions, you don't really need it. I think people have a high income or high possibility to spend, so they spend it on cars and mobility, because if you need to transport something, if you want to do a travel with your family, it's sometimes practical. So, and if you're living in the rural side, it's harder to live without a car, so you have flexibility. Like there could be other solutions as well, and in the cities it gets less, but we also have urban sprawl. We have big houses outside of the city, so many people have a car, and it's like standing 90% of the time, but they have it and they own it.
Okay, great. I'm going to touch a little bit about investment literacy exposure, especially among the youth in Germany. And I don't know whether you could shed some light, especially on the European perspective as well. So, are you guys exposed from young about financial literacy? Is it something very commonly taught in schools, or is it something that you have to learn as part of your adulting in a way?
No. So Germany is still a country that's dominated by not really investors. So compared to the US, it's a developing country. I often make the joke that the investing scene in Boston is as big as the whole German investing scene.
Okay.
So you still don't have a big investing scene, and people have to learn it by themselves. So
I see.
We have a long period of time where we have low interest rates and people were savers, which is generally good. But after saving, you have to do the next step and invest at a certain point. And people don't do that often, and they're cautious. And Germany still has, which is also world leading for Germany, insurance branches that are strong. So you have Allianz and all the other insurers that are interesting, and many people still buy their products. What was really an interesting product for many Germans is life insurance. So people have this, but if you look at the bond market and the way bonds will be returning money, it looks awful. So a few more people are waking up to buy stocks, and I think it's maybe 20% in the highest regions that own stocks or funds or any other stock market product. So it isn't that good. We also had some privatization plans for the rental system, or not the rental system, like the retirement system. Sorry, that's the right word. But it was done in a way, in my eyes, it doesn't help compounding, but it helps the insurance industries. So we had some lobbying there, and we had products that could help you. Generally, if you think about the different cases, I also did try to study this before I started investing, but there's so many products.
Yeah.
And they can help you with some financing. For instance, if you want to use it to buy a flat, then it might help you to pay the credit back and stuff like this. But it's really, all in all, it was not really a good solution for many people. So we are currently discussing about building, like in Sweden, the state fund, or in Norway, there are different models in the northern countries that invests on behalf of the people. And I think it's helpful that more and more people are investing, but it's also would also be helpful to have some trusted things you could invest in, because it's hard. Like if you think about an investment, you have to be good at investing. Many people can't just do this. So you have to have some general products that have a high level and that can have a low fee structure and that help people. So generally in the political way, it might be better to build such a product for all. There are many discussions. We currently have election about the way it's done, but generally, I think it makes sense to have such a product.
I see.
And yeah.
I want to get your thoughts on politics, I think, later on. But
Yes.
I think I want to go back to your journey into investing. So when did you realize that, investing is not just, something like for the rich or something, but it's something that you actually can do and you actually have to do, especially in the kind of economic environment that you're in, where essentially the interest rates are closing on to negative, right? When was the moment, or was it gradual?
I burned my fingers a few times on the stock market because we had this 2000 bubble. It was like many Germans went to the stock market, they bought stocks, they bought the telecom providers, and lost money. I also lost money. At this time, I could have doubled my money. It was crazy. It had the same feeling as maybe 2020 somehow, but I think it's more substantial what happened 2020. Like the stock market went up like crazy, and then it was 5 years, 10 years of like pain. Yeah. So this was a time I burned my fingers. Then I came back. As I got some money, like the main trigger for me to think about investing is that I did get some money I could dispose and build something with it. My plan was always to build something with it. But as I had minor knowledge in investing, I just went to a bank and was thinking they would help me. But banks are mostly, not all, but mostly at this time were sales machines that want to sell products, want to have fees and want to earn from these fees. And you have to pay the nice bank office and the nice guy with the suit sitting there and selling you something. And there was a certain push coming from them. And I bought some funds on the day of the Lehman collapse, which wasn't the best timing. And then I shit in my pants and sold some of these funds with not holding them. So I burned it twice. But at a certain point, I was analyzing different, and I said, okay, I analyzed different products and analyzed this state-funded products and take a look at these products. But yeah, it didn't make really sense to invest on those products. I still found some cooperatives. So we have this tenants cooperatives that have huge housing stocks because they were mostly built around 1900, 1920. It's quite attractive to be there if you want to rent. Like this flat is also a cooperative. I pay less as the Mietspiegel, like the rent level, and the others have, and the renovation standard is higher, and I'm not fully owner, so my capital commitment is like a few €1,000, and I get higher standards and get better living and pay a rent as well, but the rent is substantially lower. So it's, if from an investing perspective, it's good, and also from a social perspective, it's good. This is one way I did invest, but then I gradually went to stocks because it's the way to to build something. And I also got interested in how really good investors do this, because there are some outstanding guys out there. I had the luck to be able to talk to some of them. Many are still private. You will only hear about them if you meet some good guys and they say, do you know this guy?
Yeah.
They're somewhere there. And but some were able to talk to and share. And it was quite interesting to see some guys that like compounded with 30% per annum, which is still like
insane, right?
Yeah. Or like 40, 30, even 15% is really like strong.
Yeah, it's really good.
Yes, yes.
So
among 10 of your friends, I mean, it's just a sampling. Among 10 of your friends, close friends, if you grew up with them, how many of them will likely be having the same mindset like you into investing, into compounding their money? If you could give us a sample, rough sample.
0 with 100, I think it might also be maybe 1 or 2. Like from 10, it depends a bit. I think I'm not sure if I should check Facebook and see what these people are doing, but they it's not a high percentage. Some friends of mine, yes, they are working in industries, but it's not my school friends. And I think about my school class. They are working partly in really good Mittelstands offices or big companies, and I think their salary should be good, but I'm not sure if they're really investors.
I see.
Or you have this as I was at the beginning too. Like you start investing and you're completely lost, and then you start trading a bit and doing whatever. So it's not that high of a percentage. And really engaged investors are rare in Germany. It's growing, and I'm not sure. Ian Castle described it a bit for the US. In the microcap space, it were mostly old men.
Yeah.
And over the years, more and more young people came to it. And I think in Germany, we see the same development, but it's still more gravitated to older people. Yeah.
I see.
And it's mostly men. I think in Germany, it's 89% men, which is also a bit strange, because if you think about investing as a profession, you might be able to combine it with family, but it's still stuck with.
I have this kind of side question, right? Like, I'm not sure if you've checked your own viewers, like what the demographics are.
Yeah, the subscribers on YouTube. How many men, how many women?
It's 100% men on YouTube. But it might be like, or let's say 95 to 100%. It depends on the time frame in the video. And on Spotify, it's interesting. It's more female. So maybe Spotify has better data, or even Spotify is more like a female app. I have the suggestion, I think, because if I talk to Spotify hardcore users, they are more female. So this might be the reason for this. And so if they subscribe, the possibility is higher for them to hear it. And but also with other channels I watch and see, YouTube is mostly a male domain. I think
that's right.
I'm not sure. Maybe general, it's 70-30%, and maybe Spotify might be more woman.
Yeah,
because they can't spend that much time watching, or I don't know. They're clever and combine it with walking and going
multitasking.
Outside.
Men aren't that good. Women are very good at it, actually.
Yeah.
Is there a book, or MJ asked you when do you pivot into this? Was it a book? Was it a person? Was it an event that really got you into stocks?
I was visiting my aunt, and she had this book of a German crash guy. He called a crash, and he's also a value investor.
Okay.
And I think his crash call was very precise some years before the financial bubble.
Okay.
And I found his book, and he had some basic rules about investing, and he was helpful. Yeah,
I see.
For me to get attached with this investing.
I see.
Yeah.
Did you pick up the skills of reading financial statements and everything by yourself, or do you have a structure or someone actually helped you along the way to understand businesses or financial statements?
I tried to pick them up by myself, but I'm not like super into financial statements. Financial statements are one data point that are interesting for you, and they have to go in the right direction. But in most cases, if things are really looking good on financial statements, you can't build your edge as an investor. Like if you want to say you have to plan to outperform, just if you're starting, you want to learn and experiment, like investing good based on financial statements and quantitative analysis might work, might be the way for you. But I think if you want to try to outperform and focus on misunderstood companies, the financial statements are one interesting access point, but it's more about understanding people, culture, products. There might be even companies that have built out a product that isn't really showing its strength. But if you have understood the product, what it could do, where the demand is, it might in 3 years turn into great financial numbers. So financial statements are one important component. And I think if yesterday we had a talk about portfolio construction, and I think the most important thing, if you think about your portfolios, don't have a blow up. So I had my blow ups and I'm scared away from debt. Or if you want to invest with debt, you have to be really, really careful. And I like companies that have cash on their balance sheet and that are, in this sense, more conservative. This is really helpful that you take care of not blowing it up if you look at the financial numbers. But financial numbers are just one indicator, and you have to make a sense what is happening behind the scenes, behind the company. Maybe it's just my view as someone who studied, like coming back to the study, social sciences, and more having like this, I don't know, holistic view, if you want to frame it like this, to better understand the company as a living structure, with its own rules, his own gravity, with its own structures.
So what it's clear to me that you've gone through a lot, and I just want to know, like, how would you describe, or if there was ever a label, your investing style? Is there one in the first place? How would you describe it?
I'm struggling a bit with the label of value investor because it's not really precise. I would frame it value-oriented investor. But in some talks, I noticed that I'm more value-oriented, or like more a value investor. So I think it's about price. And I like this idea of builders, like people who can build companies in a certain way, have a vision. I don't know, vision is really the right word, but know how to balance reality and demands and what is out there to build a product that is desirable for people, and that don't look about the next quarter to fine tune something, but look out 5 years, 10 years, and even take some pains to build out a better product, better value proposition for the customers. And I also think it's important to have companies that add something better to the world, and not to have companies that are just like, exploiting, short-term sighted, but that create win-wins for different stakeholders. And I think some might disagree, but I think the most important component of companies aren't the investors. So investors come last. First come customers, then employees, and after that, a few steps, then come shareholders.
All right. Even bondholders are more senior. The equity investors sometimes forget that.
Actually,
that's
do you
another
have
conversation? Sorry? Yes. But go ahead.
Yeah. Do you have? So you describe. I just want to understand the way you look at investments, perhaps in a case study or real life stock, right? So what would be a stock that you would say that you're looking at right now, or you've looked at it in the past, that fits your vision of how you invest? Like, you mentioned things like mixture of price, a mixture of builders, people being able to balance the demand and all of that.
it's hard. Maybe you can pick one stock that interests you. I have this European company that invests in tech early stage or Nintendo. What is more
Okay, is
interesting
Carl
to you?
Zeiss listed? Carl Zeiss.
Again, sorry.
Carl Zeiss, the lens company.
Carl Zeiss, the German lens company. I think it's listed.
Yeah.
But I haven't
You
done
haven't
any work on it. So I
Okay.
visited the city it is in, Jena.
Yeah.
If it's
Yeah.
really beautiful. They are in
Yeah.
a valley and they have a nice tower and it's quite interesting, but I'm not invested in it. And yeah.
Probably give an example of a company, a German company that you have looked at.
Because
something
I think
that-
Tilman gave a choice, right? We had to pick either Nintendo
But it's
or-
not a German company. But maybe if you want to talk about German companies, I'm fine to talk about German companies as well.
Give one that probably has a brand name to globally.
that
to
kind of
us.
fits how you
I actually want to talk to you about the Wirecard scandal, but I reserve that.
Yeah, we
for
can
the-
talk
for-
about the Wirecard scandal.
Please. Why don't we talk about the Wirecard scandal?
If you want to talk about the Wirecard scandal, it's such a failure. Sorry. It's just like the first you're thinking about. I came in touch with Wirecard because a friend said they look cheap on a numbers basis, and then I met another guy who's a financial journalist in Germany. He's really good. He has this website börsengeflüster.de. It's like stock
is it
market
in English?
whispering.
Is that in English?
No, sorry, it's just German.
Man.
If you wanna have some, you could use it with DeepL or Google Translate if you wanna read about German small and mid caps, but it's in German. So sorry about this. But he told you the story about the Turkish Boxer. Have you heard about it? This story with Wirecard.
Enlighten us.
There was one journalist who was criticizing it very early because I think it's a fraud, and they found out his address. And they went there, the board of Wirecard, I think, with some guys from Wirecard. And they said, here, look out there, out of the window, there's this guy, he's a Turkish boxer. And in Turkey, people will be killed for even less than what you've said. This was the claim they made. And so it was not investable for me anymore, this Wirecard thing. And there was some rumors in the stock market scene. If people talked about Wirecard, if you talk to certain people at conferences, they said, oh, that's not investable. It's really bad thing. And also this indication, you can't do this as a business. That's totally crazy. And all the way they went to the stock market is really fascinating. They did this, I don't know how it's called in English, this strange IPO where they didn't list with a bank, but went public through buying something bankrupt.
A shell company, direct listing.
Shell company directly to the stock market. So there was no really big process of scanning. And they were really like, if you read the reports, they were really like optimizing for talking to shareholders, improving shareholder value, and use this as an exploitive tool to get money out of the company, and making this story about we are the German champion. We have this great technology, and making a cool story. And many people followed this. And there were critical voices, but they made it a bit like Scientology. So people who wanted to save the shareholder rights and do this as a profession and go there and ask critical questions. They came to the annual meeting and they were just like, there was a super hostile climate for them.
Wow.
And they were pushed out. And behind the scenes, if you see the reports and watch some documentaries, it was, I think, more a criminal organization.
Oh, and okay.
They did things like they came out of, I'm not sure if it's online gambling, money laundering. So like they did some of the processing for this and built some technology, and also had this tied to some spy agencies. I don't know how you say it in English,
spy agencies,
because they were interested in this transfer of data and stuff like this. And so there was a huge criminal intent, but somehow they made it with a clever communication strategy and with the interest of maybe local federal politics to have some champion there, not to kill his champion, to get some protection from politics.
Wow.
Which was all in all an awful thing, because they did this. They got this legitimation from the authorities, not only, but also from the Wirtschaftsprüfer, like the Big Four.
The Big Four accounting firms.
Yeah,
the accounting firms. Audit firms, sorry.
Yeah.
Audit firms.
Yeah, audit firms. You're right. And they did get this improvement, but there are some stories about the auditors going with them on events and having spending a lot of money and having naked girls they could eat sushi from, and like all these things you even don't think that are real, but they seem to be real.
They should make a movie out of it, man, Tilman.
I think they are working on it. It's really it's really like strange what they did there, but they somehow made it. And the thing is, they had this example with the Turkish Boxer is a good one. This kind of style they did with every critique. So if you're a tiny guy who wants to do critique on this, and if you're right, they would come with their lawyers. They would come with all the millions they took from the stock market to fund their criminal, whatever you call the system.
Yeah.
And they would push against you and push you against the wall. So there was this, they somehow built this kind of culture where they could do this. They found many people who were satisfied with this company because the stock price was going up. It was like, if you think from the peak, maybe it was I'm not sure. It was 100 bagger.
Yeah, easily 100 bagger. Let me see.
I don't know where they started when they went to the stock market, but so they made many people rich, and it was a story that many loved. So it all ended in this big disaster, and I think there was a big failure on the politics side, because they made it that people believe they are a legitimate company. And also like our control instruments and our control bureaucracy failed on this badly. But it's
what
I'm not sure if we really won't have this again, because you have an area where a lot of money is, and you have people interested in getting rich quick and pulling this money out. And you had the scandals also in the US, Enron and other companies. Yeah. So I'm not really sure if we are protected from this. So that's also one lesson. That's also, I would book it under the blow up lesson. Stay away from things that smell fishy.
How do you think the German authorities, or probably the investors themselves, could have avoided this, Tilman? I mean, what were great that you pointed out these journalists that, put it on whispers and all this kind of things. But in terms of the authorities, do you think they could have done much more, in your personal opinion? Or do you think that it was enough for them? It was more the investors who had to understand the business well? What are your thoughts?
I think they could have done way more. They didn't do their job. They did the opposite. They did harm, because they said they are foreign short sellers. They bought this claim Wirecard made. Said they are foreign short sellers that are against German leading companies, and we have to protect the German leading company.
German interests.
Which is, generally as a politician, you have to help the companies in your country and support them, but you also have, if there are claims, you have to go after them and make sure you control those claims. And if you don't do this, it's not doing your job. You should have done this. And the thing is that the stock market public is so tiny in Germany. I had this one video. It was I had luck. I did one video on Wirecard. It was early and it was very good. So it went to 10,000 views. But for this kind of scandal, it's nothing.
It should be
if
more
you think
than
about
that.
the general public, it's tiny, the interest, and people are just like, there's not that many stockholders. So there is this sentiment that makes it really hard. And I think there's also a big connection between politics and the stock market scene. And it's more shifted to the conservative politics than in this part have been maybe also holding their hands above Wirecard. That's my way to observe it. So, yeah.
Sorry to interrupt this podcast. I know it's a little bit annoying, but I want to tell you something that I think can be really helpful to you. I can tell you're really interested in the stock market and want to learn more about it so that you actually know what you're doing, especially when today things are getting more complex and complicated. That's why we came up with the Stock Investing Blueprint, or SIB. It's our signature e-learning program that teaches you how to pick the right stocks most of the time, buy and sell it at the best possible time, and manage your stock portfolio systematically. It currently has more than 10 hours of content and it's growing. You'll also be part of a group of like-minded investors that can help speed up your learning process. To hop on the program, click on the link in the description or go to learn.firl.co/courses/SIB.
It was a shit show.
What is the example? So that's one extreme end, Wirecard. Can you give us, me and MJ, an example of a great German company that have been a multi-bagger, and what are the characteristics that they have displayed actually?
And then, basically a stock you wish you held.
You wish you had bought it, many years ago
in year 2000, something like that.
Yeah.
It depends a bit. One thing, there are many interesting companies in Germany. The thing is, many great companies aren't listed because we have built our economy over decades and decades, and they could be like, you have this compounding effect that's not part of the public, because families could help these companies. And one good thing about Germany is we have many of the banks that really take care about companies. I talked to one fintech investor. He told me about other regions in the world.
Okay.
These banks aren't there for finance small and mid caps. Yes, we had some problems 2008, 2009, as some of the smaller companies had problems with finding finance, but all in all, the banks are working and help the Mittelstand to grow. So there's this ecosystem where you don't need to be listed. And there are some companies that are interesting and great, but they are listed because they were listed at a certain point and nobody wants to take it out, and they're 75% family controlled.
Oh, wow.
So,
okay.
So it's just like they are just listed, and it's not really that they're super shareholder focused because the family controls them. I think about other topics. So you have a certain part of the German economy that's not listed. If you think about maybe, for instance, Miele, you might know the dishwashers and the washing machines. They are high quality. They aren't listed. Liebherr, they do the fridges and also construction. This Herrenknecht company, I told you, this tunnel machines. And
Liebherr,
they
also
companies
do cranes, right? The crane, right?
Yeah.
Liebherr. Yeah. It's very famous. Yeah.
They aren't listed, and I think they're good businesses. And there are some companies that aren't listed, so you can't invest in them. And
I see.
There's
what will be a
also
listed one that is good? Sorry. What will be a
there's
listed
smaller
one?
caps in the green tech space that are quite interesting. I did this interview with Abo Wind.
Okay.
Abo, Wind. It's in the same
What do
English.
they do?
They built wind plants and solar and energy projects. So they are part of this transformation to green electricity. And I think they had a CAGR of 50% per annum since 2017. There's a lot of multiple expansion in it, and it's also the shift to green. But generally, they're doing good. They have this project in the pipeline that's getting reevaluated, and this is quite interesting for insurances and stuff like this. So it's had already run, but they still have a lot of projects to do. And it's not the perfect recurring revenue business, but if you think about the headwind they have, it's just like they will have work for a while. And there are other wind park developers, Energiekontor or so, which is quite interesting. And another German company that's quite strong and maybe one of the strongest over the last years and underestimated companies, and still, I think, compared to peers in the US, not that richly valued as HelloFresh. like the boxes they send out with food. So we can order meals and they send it to you, to your home. And it really is also a multi-bagger over the last years. And they still have a long runway to grow because they built this new category of food boxes.
I see.
With pre-prepared meals. You can order to your home and enjoy. Yeah, that's also another interesting company. There are many like companies in the niche. There's one bigger, if you want to bet a bit on capital allocators in Germany, it's MBB.
What do they do?
They buy and hold different businesses, and it's quite interesting what they have achieved. If you look at the stock chart, it's like going from 10 to 120 or something. So it's good how they did it. They also know how to play the stock market at a certain point because they spin off their businesses. Then they went down and then buy it back and do stuff that's...
MBB. Yeah. I think I've heard of that before because there's an American investor. I forgot for the life of me. I can't remember. He's focused on European stocks. And he mentioned about this because they usually buy mergers of companies, and then when it's valuable, then they'll spin it off. I think, yeah.
So actually, I know you're a fan of Nintendo, right? Not just the gaming, but the stock as well. So you share with us like why Nintendo? Why is it an interesting investment to you?
Nintendo is an interesting investment for me. I did this long video. You might want to link it as well if you. There's also transcript.
We will put it in the link. Yeah, please.
With Ryan O'Connor and I hope I have it right. I always mess it up. I think it's Todd Wanning. Sorry.
No worries.
And it's quite interesting what has Nintendo achieved over the last decades. Like if you think about the time you were younger and the IP they have, and even your parents might have been younger at this time, and they played Nintendo. They built these consoles. They built very interesting characters like Mario and Zelda and Luigi, and we all know them. And just a small Toad and whatever. And they seem to be transforming their business away from, like, if you think about Nintendo and look at the stock chart, it's like going up, going down, going up, going down. It's this console circle. So you have to build a new console. Like, wait a second.
Oh, nice.
This one,
the Switch, right? Yeah.
And you have to, like, with every console, your customers disappear because you build this ecosystem around the console. You have different devices you build around the console, like, for instance, the Ring Fit and whatever you build.
Oh, I didn't even know that. Wow.
Yeah, you can use it for training, and you can build this kind of hardware, software ecosystem a bit, but you have to get every customer new when you're building your new console, because the hardware is too old and stuff like this. And as you might be gamer guys as well, you notice if you were younger, Dad, I want to have a new computer. Mine is 2 years old and it's too old to play good games, and I need to buy one.
It's too slow.
Yeah. And I think this also has changed. Like, if you think about the computers you have and want to play games, maybe not the newest high quality game, but if you think about playing games, you could do it with your old machines and could do it with your machines you already have from the office. And so the circle is not that strong anymore. Like, even with the Switch, Nintendo is this thing is 4 years old.
Yeah,
you could still play it like this, not this one, but like the general hardware and the conception and stuff like this. So you could play with it still in a good way. So this hardware boom bust cycle is going away.
Yeah.
And Nintendo, in my eyes, they are switching to more this kind of Apple model, like
ecosystem.
incremental changes to a hardware you already, or a system you already conceptualized, and that's good and that has quality. So you could also go about, like, they releasing the OLED version, so there's no frame like this. It's smaller and it's higher quality, higher resolution, better sound, more more space to save games on it. And
memory.
they're going into this incremental bettering and keeping this system. So they're also keeping their customers. So it's quite interesting for you to buy maybe Nintendo games for the Switch and not being wiped out with your ecosystem if the Switch isn't continued. Yep. But you have the chance, like, even like buying, if you buy it early, you can have 8 years of game supplies. But with the Switch, you might be able to have like 10, 12 years of game supply with interesting games.
Prolong the ecosystem lifespan, actually.
Yeah. And Nintendo now has access to the customer directly. They have this email address with the Nintendo account that's growing strongly, so they can try to send out email campaigns, reactivate the customers. Nintendo is quite clever about this. They do it monthly. They're not like, I want to spam you. And they do nice mails and thoughtful mails. They start going into other things. I have one thing I should collect as well. Wait a moment.
Yeah. Very interesting, man.
Yeah, I mean, Nintendo is amazing.
Yeah. Actually,
I posted on Twitter. Some of my followers might know this. This is if this German company would be public, it would be also good investment.
Oh, I buy those. I love those, Tilman. I eat those once a month at least. Actually, Haribo. I didn't know they're German.
They are German. They are made from Cologne. They have this Haribo series of Nintendo, and they are working a bit on positioning themselves for the release of the new Mario movie with this. I think it's kind of like theatrical inspiration. Like, so you build this new product, you get your customers in touch with a limited edition of these gummy bears with stars and coins and stuff like this.
If they do list Tilman, please let me know. I'll be.
I think they don't need to list. That's a cash machine.
Yeah,
and they were really successful with, still probably successful with Pokemon Go, right? I know it was really big for Nintendo.
It was big, and Nintendo is just like holding 30% of the Pokemon company, so they profit from licensing revenues that's coming from the Pokemon set. But Nintendo is not Pokemon, which some people might mix up. Sorry. You're right that they were successful. Just wanted to make this point clear.
Yeah.
And coming back to the story Nintendo is producing, they also, if you look at the Lego connection they've built this kind of Lego ecosystem with Nintendo. So you have Mario as a Lego figure, you have different sets, you have a cube that can turn into different places where you can play Lego with. So they're building this kind of new products around the Nintendo brand and using their brand, their IP to monetize in a better way. They are building theme parks. They are building merchandise shops. It's a bit like Disney, but not that fully controlled with the merchandising and brand things. But they are going into this direction. And all should come back that you finally go and buy a Switch and buy either some of these cartridges, like the games on this way, or even better for Nintendo, you buy it in the cloud, or you buy it with your Nintendo account. You can make direct sales through it. And there's this eShop. I think it's this one.
Okay.
So you could go to the eShop and buy Nintendo games directly, which is better for the margin of Nintendo because they don't have the local retailer and they don't have to ship a cartridge, and they even take the higher games prices for these games.
Wow.
They also can discount the games, and you see the eShop, you could buy games there directly.
Nice.
And what is also quite interesting, Nintendo with now 85 million, 90 million, maybe 100 million soon devices. It's an interesting ecosystem to go to as a producer. So I talked to a game developer. They said they will release the first game for Nintendo now, and they could use the developed games and go for the Switch and Nintendo. A bit of a bad thing is that Nintendo still has these 4 or 5 year old games.
Okay.
So for instance, if you play FIFA on the Switch, it's still the old graphics from 2019, I think.
Okay.
So at a certain point, it gets annoying But Nintendo has the chance with building a Switch Pro or whatever they call it, to open the market up for this unlocked demand. So you could use your Switch, for instance, and go and play some hardware-driven, super hardware-intense games on the way, or use it at your computer at home or your screen at home.
Okay.
So they have this chance to unlock this existing demand with an upgrade. Currently, they didn't do it, which I also think is quite wise. Nintendo is a bit conservative. So you have to, if you like it as an investment, you have to get comfortable with it. It's not the shareholder pushing and super aggressive company. Nintendo is really like long-term oriented, but it's also a clever strategy, I think, because they are the not really challenged brand for the family and family entertainment. And they also have a good reputation, which can transform in higher prices. So if you think about the Switch, this thing still costs 320 euros or something.
Wow.
And it's the same device they built like 4 years ago. They did some smaller updates, maybe some smaller hardware improvements, but it's not like the newest OLED smartphone, TV, whatever.
It doesn't need a super duper chip, put it this way.
Yeah.
So, like in terms of, sorry, you got something to say?
No, it's fine.
So, like, let's talk a bit about the risk, right? So, I think we can agree, like, just the whole branding, and it's almost like a mythical being, really, in my eyes, at least for Nintendo, right? I mean, Super Mario, all that. When you think video games, you think Super Mario, but what about the competition, right? So, if you were a shareholder, what level of concern will you put that, Nintendo will not be able to be as relevant, let's say, in 5 to 10 years' time?
Yeah. The main risk is that, like, currently, if you look at the share price, if you look at the whole gaming sector, everything came back. Even if Nintendo had a good year, also not maybe compared to 2020, but compared to 2019, they looks really strong, and this business seems to be substantially better. But it still could be that you have this peak console circle. It's like that you say, okay, Nintendo said they want to plan a longer console circle, but through some technological change or through them being wrong, the console isn't relevant anymore, and you have to buy this new console, and all the hustle has to start from the beginning. They might even, like as they did with the Wii U, make a bad console so they get irrelevant and they might run into trouble. But okay, counter argument is they still have this IP. Maybe they use this IP and license it, and so you won't be broke, and it might be also an interesting business.
I see.
Another risk is that they get irrelevant. So they still keep the Switch, but people say, I have my iPad, I have my smartphone, I have my computer. I don't need this Switch gaming experience. I can play all on my mobile. They are, in this sense, if you compare it maybe to the gaming industry of the 1980s, a bit less relevant, because you need an initial investment to buy a Switch. It's not cheap. It's like $300. Then you have to buy games that cost $60 or $50 and stuff like this. So you have this financial hurdle. So it's more kind of bad on the American, European, maybe Chinese consumer, and maybe richer people in Malaysia, but not the general people. They still buy the smartphone games that are cheaper. And Nintendo also hasn't made it to smartphones really good with the games. So they could have done more. So they aren't really good in this way of as aggressive growth, taking the new possibilities. They're more going their own way with the hardware software interaction, which is also quite nice. Like you could use this thing here, you could use it like playing like this. It has force feedback. You combine it with the Ring Fit and make a game out of it. I hope I have to get the right thing. No, I have to get the right thing to use it as a device, and you could push it and make some training and stuff like this. So there's also a surplus for this model. So you could say, okay, it's old fashioned and doesn't make sense, but all in all, they are targeting, like Apple, the premium sector of the gaming space. They're even broader brands as Xbox and PlayStation in my eyes, because Xbox and PlayStation is more targeted to male audiences that want to have good hardware, and like the 13 or 12 to 25-year-old males or 30 years old males. And Nintendo is something you could play with your grandma at the moment. And it's also nice for kids to have this nostalgia. Dad is playing the first video games and the first Super Mario with the kids. And now you have also the Super NES games on the Switch. You can also play the old emulations. And it's quite interesting to have this broader category. You might not have the stronger hardware addicted and software addicted category, which might be also a problem for them, because you have this trouble with China and the legislation. They said we want to limit this time consumption of games, which might be also good for Nintendo, because Nintendo made it to the market in China and they have the partnership with Tencent. Yeah. And Nintendo is actively, like, the idea of them becoming irrelevant might not be that feasible if you think how they are working on making themselves connected with their customers and being visible. Like they built this partnership with Lego. They built the theme parks. They built theme park interactions with the Switch. They built a partnership with Haribo. They built a partnership with this shoe companies. You know, as I was young, it was super cool to have the shoes that blink when you walk.
Oh, that one.
They built a shoe with Super Mario in it that blinks when you walk. So they've built these partnerships, and the shoes are sold in an interesting way. So I think they are working on a clever positioning to keep in front of the eyes. And then coming back to the idea of this is part of my thesis. I'm long. This is no advice. And
I have a question from the way you see things, right? I remember when I was still playing consoles, Xbox, Kinect, and PlayStation Move, right? And they came out in the same era for Nintendo Wii. But for some reason only, or at least the reason eludes me, that only Nintendo got out of that and unscathed, because no one's playing Kinect anymore. No one is playing, to my knowledge, PlayStation Move anymore. But everyone remembers, Nintendo Wii and the weird characters that they had. And even today, if you look at how they've constructed the Switch, you can take out the controllers and kind of create like a pseudo Nintendo Wii, right? Why do you think that more movement kind of console worked for Nintendo, but not for the others?
I wasn't playing console games at this moment, so I can't really give you a good answer. I just came back with Nintendo, and also the lockdown topics we had. And I think we might also see in autumn and the winter where we might have some troubles again, because vaccination rates aren't that high. So if you have the chance, get a vaccine, please.
Yes.
Because otherwise, we might run into trouble, and hospitals might be overrun. So there might be a setback again from the level we have now. So people came back to using this, and Nintendo somehow has made it to keep up a loved brand and be really clever about the way they engineer things. Like maybe you could say Nintendo is conservative. They aren't pushing hard enough. They aren't releasing things, but they are more in the game of, which is a bit German, but also maybe more Japanese, of perfection. And this might be a bit of a problem in current times, because if you think about software, the new Windows version is released, and then you're the tester for that it being stable and stuff like this. Windows has gotten way better, but you know from former times. They were testing out, and but I think generally with Nintendo, it's not to be about being new and really different, but it's about them doing the same thing, keeping the same thing longer, and being more stable. So before your question, I want to make the argument, if you think about the capital market and what the concern is about Nintendo, is that Nintendo will go bust. And there are so many things that show me Nintendo has built a more resilient, more recurring business. They also have a huge share of software as a service subscriptions, because you can subscribe to playing online, you can subscribe to getting access to some of the old adaptations of the games. So they are more kind of a stable business where you say, okay, you could grow the Switch ecosystem from now 90 million to 200 million devices. You might be even able to make a Switch 2 Pro that still works with the old stuff, but also hedge people into buying new devices. You could directly access the customer and don't have to put margin away for the retailers. You don't have to put margin away for making these cartridges. These cartridges and put this plastic chips in here, because people can buy it directly and download it. So you save it. You can have even higher prices because you're Nintendo, because you're some kind of the Mercedes, the Apple, or whatever you want to compare it of production of video games. So they have a chance to build it in a good way. That's my take. I'm bullish, and this is no advice, but I think there's a chance that they might have come out of this boom bust circle. And the street, this is where I think it's an interesting investment, because the perception, even if they did good, still is it will go down. They will bust. But they are doing so many things to broaden their business, to get more people to their core, and that I don't think the chance is that big.
Understand.
And it's still a crazy business, because you can they earn on this device, they earn on this device, they earn on the software, and it's software sales that get bigger and bigger over time. Strong.
Yeah. Great. I it seems that you're really bullish and enthusiastic about Nintendo. Let's switch it slightly a gear, back into more of I would say a macro kind of question. What are the headwinds that a lot of it's a perception that I based on what I read, is that European markets are stagnant. They're not interesting to invest. It's not just Germany. It's like countries of Italy.
It's Europe, period.
Yeah, it's like there's no growth in Europe. What's your view on that? Based on what you see, I mean, as a German consumer, as a German investor, and also Europe in particular, in general, there's a lot of perception that Europe is just flat. People look through to Asia, Southeast Asia, North Asia for growth, for China for growth. But Europe, there's no chance. Are you countering that? Are you agreeing with that? Or what's your take?
It's yes, no, maybe answer I want to do. That's the perfect answer. No. I'm generally not a fan of this perception of markets and economies you're investing in, more bottom-up, fundamental-driven investors like you are as well. So generally, I go on this level of the macro level, yes, I could say, if I could find arguments that Europe is an old economy and that it's not really growing. But then you have to, I don't think we aren't ETFs investors, and ETF investors believe they have to go to the regions and bet on the regions, and they will grow, and they just mix the ETF portfolio depending on whatever.
Yeah.
But generally, I think looking out in the future, I think our world is for different challenges, climate change and economic upheavals, getting more fragmented. So if you think about, there are also different studies that translated in the stock market. So if you just bought like the best % of the index, they would have performed like crazy, and you're buying all the other companies aren't really that good. So I think it makes sense to do stock picking. And focus on the opportunities that are interesting, and then a whole different world opens up for you, where this broad category might be also for your surplus. Because if you think about the people you're competing with in Europe, and the people you're competing with in Asia and in the US. I think Europe is a bit of easier to win because there aren't that many people looking for growth companies. They go to China. If you think like Alibaba, how many people talked about Alibaba from the West that were interested in it without having a clue? And I did post a video with some of European growth investors that also have global portfolios, but they have focus on Europe. The companies did an IRR of 25% per annum.
Yeah, it's insane.
And
right?
nobody's watching these videos. It's like, and most of them are Europeans. So if you think about this, if I look at the small and mid-cap space in Europe and Germany, for me, it's easier to understand because I'm coming from this background.
Correct.
I think my thesis is more and more, and also I found this in a video with one of the big venture players, that they are coming to Europe because there are interesting companies being built that are tech companies that are also getting bigger. Netherlands, Prosus is there. They have a big portfolio. It's also a way to play Tencent if you're interested in it. But I would love to not own Tencent and just have the other portfolio because I like it more. In Sweden, you have an ecosystem of great companies that are growing strongly. You have in Germany, you have some interesting companies in the Mittelstand that have long runways for growth. So you have also Delivery Hero and just delivery businesses. So there's some interesting companies in Europe. And I don't think they are like on the example of HelloFresh. I know it more as I was looking at it. The price they get in Europe versus the price they get in the US is different. And German investors tend not to strongly look at these companies and might feel this is an odd investment or not of their framework. So you have these mispricings that are more interesting, for investors. So for you, I would say keep on investing in Asia. You're closer to the subject. You know what companies are good. But for European investors, I think if you have a certain mindset and are looking for interesting growth companies, maybe it's not like you don't have it Silicon Valley, like you don't have
the Ubers,
Google, Facebook, Uber, whatever collection. But if you look for it, you find this one company that could 10x from here. And it looks like if you look at the valuation, you still think, why is that so cheap?
Yeah,
it's like
exactly.
In the US, you have a lot more competition. So I'm still quite fine with looking at the European companies. And you have this maybe a problem, maybe surplus. It depends on your stance. But Europe, I don't know how is it in Asia and Southeast Asia is like Europe is Germany, Austria, Switzerland parts. Then this is maybe one region. Then you have France with the own language and the own rules. Italy. Then you have UK, they went away, they're doing their own thing. Then you have the Nordics. So it's more fragmented. So it's harder for companies to scale up. But it's also harder for competition to come in. So if they made it to scale up to a European player, they have one of the second largest or largest financial sphere. And own it. And for other competitors, it's harder to get in. Because they also have to go through the struggle and they better invest their money in the US. They have like from the West to the East Coast, you have maybe the same structures.
That's a very
Depends
interesting
a bit on the industries as well.
That's a very interesting insight that I wanted. Actually, this was one of the main reasons why I wanted to talk to you because I was very privileged. I spent a good part of almost a year in Holland, and I traveled while I was working there. I traveled, and I noticed that even though they call themselves a European Union, and I had a Schengen visa because Malaysians we get a Schengen visa, so I could travel freely in the Schengen countries. But the divergence of the culture, even though there's Germanic, the Germanic part, the Germanic part of it, and you've got the southern side of the Italians. The cultural and the nuances in between the different countries are quite diverse. In a way, I had a tour guide. There was one time my wife and I we had a honeymoon in Europe, and the tour guide, she's Dutch, and she said that if there's heaven and earth, So there's a joke. If it's heaven and earth, the heavens will be administered by the Germans or the Swiss, and then if it's hell, then it will be administered by the Italians or the Greeks.
In defense, you needed to add the second part, which is the food.
The food. Yeah.
It'll be in reverse.
In reverse. So if it's in heaven, the food is managed by the Italians.
Yeah.
but then if in hell, the food will be managed by the Germans. So it's just like it's just to highlight the different nuances of the European culture. And I'm glad you brought this up because you'll be in Germany, you see clocks everywhere. And then you go to Italy, you hardly see a clock in the, probably one in the train station, but you don't see that, And I think also it boils down to the entrepreneurism, the pace of life. Italians, not to say they're not competitive. I mean, they make great cars, but in terms of precision, in terms of how they bring that precision into business, also helps for you to understand when it's investing. Would you not agree, Tilman?
It even gets more complicated if you think about the different, like you have a German part of Europe, but there are differences in the German part of Europe, because here in the south, thanks to the ancestors of the Italians, the Romans, we have this Roman settlements.
Yeah.
And if you look at the map of my region, you see it's very dense. You have small valleys, and they were all built for the supply of the Romans. So this settlements continued, and in the region I grew up, I was behind the wall where the wild Germans lived. My settlements, it's less dense, so you have a lot of distance between it, and you have different agricultural structures built on this former structure, and it's maybe a bit taken from far away. But I also see that you have these small villages, and all had to specialize in a different way. You don't have big cities. We have one industry, so you have this Mittelstand foundation might also come from this. And you have different cultures. I'm living in Berlin also a bit, and I'm coming to Stuttgart, which is 600 kilometers difference. You have different cultures. It's really like North and South Malaysia. I don't know how there are differences in the way people are acting, so it's not the same cultural way, and also how business is done, what industries you have there.
Correct.
So here in the south, it's car machine creations. In the north, it's they're building ships, and their industries were disrupted. So you have different migration patterns. You have different mixes. Like there's Danish minorities, and there's strong Turkish minorities somewhere, and you have this east-west differences in Germany. So it's more complicated. You have like common rules that's more and more getting integrated with the European Union and also with trade negotiations, but it's still not the same country as the US. US was built like a few hundred years ago, and everything is
homogeneous in a way, a little bit more homogeneous.
They're culturally connected. I always wanted to get the views of a German, because I'm not sure if there's a risk of insulting other Europeans, but for a lot of people from the outside, the European Union is basically held up by Germany, and to a lesser extent France, right? I mean, they are the powerhouse in continental Europe. So, and they had the UK, right, until Brexit happened, and the feeling was kind of like the UK left Germany and France alone, right? So, from the perspective of a German, right, what do you see now, when it comes to the European Union? Because the whole idea was that you would have a currency, and you would hopefully thaw historical differences by connecting economics, by making, Europe whole. And obviously that is being challenged right now. So, as a German being right in the center, right? And, what do you think?
I think it's more the idea of the blue banana. Maybe you've heard it already.
No, we have not.
No, please enlighten us.
If you draw a map of Europe, you can draw a blue banana going from Milan through south of Germany, some parts of France, up to Netherlands and UK.
Yeah. Okay.
And also Paris. These are the strong zones of economic development, and there are a lot of strong firms. And also, if you think about this line, then the east of Germany and the north of Germany isn't super included in it. You can Google it. I hope I have described some are right. These are the stronger region in Europe. So the north of Italy is also crazy how much strong firms they have compared to the south of Italy. That's poor and has development problems. And in France, it's also the centralized state that has a strong role there. So it's more dispersed. And for Germany, it's also win-win. This European Union, you have a lot of things to export to different countries, and you have to have demand there. People asking for German products for the German economy to boom. So if there wouldn't be China buying German products, or the US or other countries, it would also be hard for our model. So this is the way we plan. And so we have to be able to, others are interested in buying our products. And we had this trade surplus, which is also a bit of a fake surplus, because I think 10 till 20% of I haven't looked up the numbers recently, so it might be roughly wrong, but that's the corridor of our things weren't paid because other people couldn't pay it, because we have the surplus this strong, and they couldn't pay it back. So we're producing things for the outside. If this too imbalanced, that might be a bit of a problem. But generally Germany is dependent on the world, and that the world is in a good state. That's also one thing to take away. Did I answer your question right? I'm sorry, I lost it.
No, it's in at least from the outside, what we are observing in Asia is that Europe is reversing, in a way. Not regressing, but they're just reversing the idea of a united Europe, right? And the UK basically, thanks to Brexit, kind of kicked that off, right? And then you had the Grexits, the Frexits, and all that talk, right? And what do you think about all of that?
It might happen that we see stronger problems there. I'm personally pro-European, and Europe is a big chance for Germany and all the nation states. And if you want to have a stronger position in the world, you have to speak as Europe. There's some setbacks in this, but if you think about the nation building in the US, it was even harder for them to build it. And there's still, like, if you think about the blue states on the coast and the red states in the middle, it's also fragmented. So it's not that easy. But I think Europe is still in an okay state. Things could be better. But I think in all, it has been a success for the people, and we will see how the Brits handle it. They have a shortage of truck drivers. Things are in problems there. I don't know. There's a lot of how they will play it out. I wish them all the best for their project, but I think it wasn't the wisest decision. But we will see how this plays out.
And they actually have this word that, the moment Angela Merkel steps down, she's the glue that is still holding it together. But the moment Angela steps down, then the likelihood of, the disbursement of the European as a union, as a state, that will be very interesting to see. What are your thoughts? I mean, is she the longest serving chancellor? No, you disagree with that?
I'm not sure if there was one longer, but she's really long in office. But the thing about her is, if you look at it from the economic perspective, she has many, it's plus and minus. She has integration. She did things right, but from the economic perspective, compared to other countries, we didn't invest enough in Germany. We have this idea of being fiscally conservative, which has also led to not push through investment projects. Like our internet is maybe your internet is better as ours here. And our bridges have to be renovated, and our trains have to be trains project has to be renovated. We're doing now more, but it's not like, if you're building a state demand for the construction industry, it's not clever to go up and down, but just to say, I'm constantly investing for the next 10, 15 years, and it's going up 5% every year or something like this. So the construction industry can build structures, and you can build people, educate people working there, and you can pay this in a manner that makes sense. But we haven't really done it in a good way. We've saved too much.
I see.
And in the long run, it's also like it's not only the debt structure you have, but also the assets on the balance sheet as a country, if you want to play it like this. And there we have problems with investing.
I see.
So there's still many people aren't really satisfied with this politics. She did a lot of good things, and she was loved by the people, but she wasn't really the chancellor that wasn't innovating and investing. It's not about being about aggressive enough. It's being about clever also enough, like that you invest. So you have this investment project. If you put great internet everywhere, it's just an investment for a while. But then based on this, you can build different structures and you can have different businesses enabled. And if you don't do this as a public hand, it's a problem. And so at a certain point, there should have been more investments. So there might also be a chance to make things better now with a new government. So it might be at some points be a problem because she really got it to manage things, but it was waiting till the problem explodes and then containing it. And
okay, got you.
I think politics is more about problem solving. If you see the problem coming up, but that's maybe too idealistic.
Yeah, but it's interesting because I mean, to sum up your point, it's about investing gradually to see the multiplier effect rather than being so fiscally disciplined and conservative that, once you want to catch up, it's a little bit too late, because this kind of infrastructure needs progressive investment rather than a one-off, like what you said. Yeah.
It's if you think about housing, there's a simple idea. If you have the scratch in your housing surface and you do it in the first year, it costs you a few bucks.
Yeah.
And if you renovate 5 years after, the whole surface is damaged, you have to change the whole surface, have to do the whole surface new, and you have costs that go up with a multiplier effect.
Correct.
And also in Germany, we still have the thinking, we have to be fiscally conservative and have to look that our numbers are good as a state. But then you have this implied debt in the investment you need to do in infrastructure, which might be even bigger in the US, but there's another point we could discuss. Would love to discuss with US guy, but
I think you guys are way ahead of US in terms of infrastructure, in my point of view. I might be wrong, but yeah.
I think there's also a point to make here. But anyways, if you don't invest in infrastructure, it costs you more in the long run. And and it's also hard for businesses to build out new structures because if you want to digitize and you don't have in your rural side the internet connection that enables you to digitize, how could you do it? So digitizing could improve profitability, and you could use it to reinvest in certain other perspectives. So there's this problem of not enough investments in certain area.
Understood. Great. I want to touch a little bit on the emotional side, Tilman. Do you think that, I think you mentioned this a little bit earlier about German investors being conservative. What do you think probably are the fears or certain nuances of European investors comparatively to American or other Asian investors that you've met? I mean, you've interviewed many of them. I'm pretty sure you picked up certain nuances that they had, and comparing them against, probably European investors. Are they contrasts, or are there more commonalities in between the habits or the emotional side of the investors actually?
I can talk a bit for the German structures, and for Europe, it's a bit hard. I think you have a very interesting ecosystem in Sweden. You have, it's a country with, I hope I get it right, 6 million inhabitants, maybe 10, 12 million.
Somewhere
it's
there,
not
5 to 6. Yeah.
It's not that big. And they have a really interesting stock market cultures with this Latour and Invest AB, really compounding machines, and people are more into stock market, but it's also the country with the highest tax rates. It's quite interesting.
Yes, that's right.
Where everyone with the ideology says, how can this work? The Swedish is socialism, but they are great investors, long-term builders. And you have a bit of Italy or other European countries that really like investing in housing. Like if you think about Berlin, a lot of the housing there was bought by Swedes, by Danes, by other regions, Italians. You have a lot of housing investment or cement investment, tourism investment in Spain. So you have these people who like to invest in housing. It's also one big prevalence in Germany.
Okay.
Like every German has to own its house. And this is an idea many have, which doesn't make really sense if you think about tax base and how you could put costs in when you think about housing and stuff like this. So there's this tendency to invest not in stocks because people think it's speculative. You can plan with it, and this aversion for stocks. And there's also what I like as an investing topic more and more is also the connection between sustainability and stock investing. There's
ESG
also
themes.
because the stock market scene is not really green. To say it in this way, they aren't really interested in the stocks, but through the last years, it's gotten better and better. But we will see how it plays out in the long term. And there in Germany, you have what is really popular in German YouTube is videos of fear, doom, and gloom. And we have the next crash and everything is breaking up and the euro is collapsing and you have to hide under your table because everything is so bad.
Okay.
And that's a bit of a hard topic to build optimism, great businesses, and to look for the future and be problem solving and forward investing. If you have this mindset, there could be points to be bad, bearish about the future. That's what I was looking for. But I think it's not the collapse of the social systems and all the fears that are going up and down. And you have this. I don't know how it's in Malaysia, you have this big tradition of gold sellers. So you have this scene of people who want to sell gold or silver bulletins, and you have to own it as a protection for your wealth. If the state comes and wants to get all your wealth and the socialists come and whatever, it's in the long run, there might be arguments for why you should own 1% of your wealth in gold. But all in all, it's like this Buffett thing is true for me. It's gold is like you dig something out of the earth with a high energy investment that you put it away into treasuries and let guard people to protect it. It's not really protective what people are doing here. And it's mainly a protection for the fear. And then in the last years, you got Bitcoin as an asset class that's competing against you. That's more flexible. You don't have this guarding cost if you don't lose your passport. It's easier to transfer it. And it's the new generation is more into Bitcoin. So there's a lot of demand going away from the gold thing. And it might be like stamps. Yeah. There's certain points you had stamp collectors and the stamps the value declined. I might be wrong. Could be people arguing gold is so interesting because it has been there since ages and gold is so safe and people trust it. But then you have to question if you want to buy a bread with gold. This gold coin is 1,000 euros. How can I buy a bread with it? I want to have a bread for one gold coin. So you have to own silver if you want to make it in a sensible way. But then you have to take care that it isn't fake silver or fake gold, and the storage costs are high. So it could work, but if you think about the industrial uses of it and stuff like this, it's not that sensible. And then you have this point with gold. You're thinking that the state system collapses and that everything goes bad, and you're safe from the state taking your money. This is some of the arguments of the gold guys. I'm not a gold guy, so it's hard to find this argument.
I'm in your camp, Tilman. Don't worry. I'm in your camp.
But the thing is, you're betting on a market that is owned to 30% by the guy you don't like, because the states own like 30, 50% or 25, whatever it is, of the gold market. So they could easily on the one side, they could go and take your gold or make high taxes on it. All right. On the other side, if the gold price goes too high, who's sitting on gold? The states. They could say, I'm selling now, ding, 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 ding. And they could ruin your fortune because, like, if the gold price goes to 10,000 euros an ounce, they say, I have something in the cellar. Why don't we sell this for social purposes? And the gold price, like, they could easily dump 10% of the gold in the market onto the market. Why should the market price be the same as it was before if they easily dumped like 10% of the gold in the market?
Yeah.
Why should the state really then take care of the gold savers?
Yeah,
why?
That's right.
It's irrational to bet against them.
Yeah. Actually, I just Googled out what you were talking about it. Apparently, the love of gold stems from the origin since the Weimar Republic a century ago.
Yeah, the Weimar Republic.
Yeah,
the
we
Weimar
had
Republic.
this high inflation in Germany. The value of money was nothing. And I lived in this house as I grew up as a kid. It was built in the Weimar ages. And then I did try to connect the lamp to the roof and did some machine to open the
drill,
roof. And there was driller. There was coal coming out of it. And I was totally puzzled why this is happening. And my father told me it was built in the Weimar Republic. They had to get everything they could to fill it in there to even have the roof covered. Wow. So we had this problems, and like you had lorries of money to carry to buy bread and stuff like this. It was really bad in this state, but also states learned from this. If you think about COVID, you had these fears, and they did really invest and not let the economy collapse, and did many good things, even saved the airline industry, which can be resumed and connected again. So I'm not sure about inflation. Maybe we have it around. There might be some data points coming that shows we have inflation for a while, but I don't know.
Yeah. Cool. MJ, you got any questions?
I do have one, which is
please go ahead.
It's also in the vein of financial habits, right, for Germans. And I was actually watching, and John, you've watched this as well, a documentary about kind of like the perception of wealth that Germans have.
Yes.
Right. And I think they interviewed a billionaire. I can't remember his name really. And
the Carl, it's from DWTV, Tilman. I love the documentary. DWTV.
So they interviewed this billionaire, then they interviewed a bunch of guys in the middle class and kind of get the sense of how they think, right? And so one thing that struck really to me that you don't really see in Asia is not necessarily a hatred for wealth, but kind of skepticism. Like, it's kind of like bad to be a multi-millionaire or billionaire, and I'm sure there's a German word to describe this phenomenon. But is that something that's true? Because clearly, I'm only basing my opinions on the documentary, and the only two countries I've been in Europe is the UK and Turkey, right? The rest no. So like, is that a fair description?
Yeah. By the way, sorry to interrupt. The name of the guy they interviewed was Christoph Kroner. Okay. Christoph Kroner, the real estate mogul.
Kroner. This guy.
Yeah.
You have a certain, like, in the real estate market, it's a bit special. I'm also staying away from it mostly because I had this one, like in Germany, we had a huge collection of housing owned by the state. And we had this privatization orgy in the 2000s, as where we were thinking Germany was that patient of Europe, and we did make this private. And with private owners, you have a different rent policy for people who rent, and they reduce investments, they increase prices. So this situation in this housing districts gets worse. And I think it's behavior I don't want to be invested in. There might be some interesting connections in investments in the housing market, but all in all, some of the practices of these companies are bad. So there's a lot of critique.
Okay.
But generally in German, you don't have this celebration for entrepreneurship and investing as in other countries. It's more critical seeing. Capitalism is bad.
Okay.
Yes, you have this perception.
Okay.
And I think, I'm not into this socialist capitalist ideologist debate. You have to build the in-between thing. We Germans have the idea of the social the social capitalism or the social Marktwirtschaft or market economy. So there's more like the Swedish model is more a thing I like because you have protection of the basic human needs with this model, and you have a certain safety, and you also have incentives and an interest to invest in certain things. And so I think it's more the bridge that's interesting, but there's also many critiques on investing and but I also think if you've talked to different value investors, many aren't really satisfied with some of the economic developments. I had this interview with Stephen Wood, and he said it doesn't make sense if we optimize for the next quarters.
Understand.
It doesn't really make sense, and this short-term thinking, not thinking in like 5 till 10 years, just optimizing, taking money out, isn't also the solution.
I see. But is there maybe I didn't there is no despise in between the working class against the what do you call it, the so-called the haves in a way in Germany. Is that divide, or is that sentiment very, very big, is really thrown upon? I mean, people despise the rich, and then they like there's no equality for the working class. Is there a very strong sentiment, or is there not?
I think for the last years we don't have that big debate about this. It was a bigger in the years we had economic decay.
Okay.
There is still Germany has one of the big markets for cheap labor. You don't think about this because you think about Germany as a rich country, but we have with the structural reforms build a market for cheap labor. So jobs that are just paying you enough to survive, but not to really save and stuff like this.
I see.
And jobs that aren't really good. So there is a certain talk and reality into this. But still, Germany is a big middle class society. You have these problems you have all over the world. At a certain level, people are so rich that they can use many ways to move their wealth and to invest in certain structures that keep them compounding to a high degree. But if you're going into the tax and wealth debates, it all gets really fuzzy at a certain point. Because compared to the US, Germany is also a tax haven in some ways. If you want to start a fund, you can start this fund and then sell and buy stocks without paying big taxes. You can even start a company and buy and sell stuff without big tax probabilities. So if you look from outside on the tax rates and the realities there's so many exemptions, so many ways to modelize it. So I think it's generally a global problem that you have.
It's not just German. Yes.
Have a certain class that's staying above all, global class, if you want to do it in this class way. But it's also in sociology, I've also did study, it's describing Germany in different milieus called or subgroups. And you have the post-materialist people who are not looking into material things. You still have the guys or girls who like the Mercedes and the big houses and stuff like this. But many people are more into, not owning that much, minimalism. You have these different subgroups.
I see.
And the societal tensions in Germany are getting bigger through the last years. Maybe it's also with the immigration crisis we had that there are some shifts have happened, which are in my eyes really bad. But it's all still compared to the tensions you see in the US, for instance. We also had this Reichstag attack with the Corona stuff, but it wasn't like there isn't that big of a tension, I think. But I'm not a comparable sociologist, so it's just my gut feeling. So
understand.
I think Germany is still a quite peaceful and nice place in many areas.
Great. Just don't lower the quality of the bratwurst, okay? Then I'll come back. Just kidding. Okay.
We also have vegan ones, so you could try.
Oh, yeah. My trip to Berlin was bratwurst nonstop for almost 3 days. The only time I switched was because I went for certain schnitzels and Rosti. But Rosti is more Swiss than German, right? If I'm not mistaken.
Rösti is the Swiss. Yeah,
that's the Swiss. Yes.
but it
Okay.
depends a bit on the quality of the meat you're eating there. And I saw some of the production videos. It's not always that good.
Okay.
But, yeah.
Okay.
Sorry to
No worries.
disappoint you.
Yeah, no worries. No, the next time that MJ and I do have a chance to visit Germany,
Yeah.
definitely we'll. Yeah, hopefully you can show us around to find the good quality
Sure.
ones. Okay.
Sure.
Coming back to what you're starting, I want to now to pivot into this section where to talk about the work that you're doing on the good. Okay, let me get this right. The Good Investing website.
Talks.
Yeah, Good Investing Talks. You said you started this with a few friends. It said Value Dach, if I pronounce it correct. Value Dach, right?
Yeah.
Yeah. So you wanted to get a website going for a community of German-speaking value investors in Germany, Austria, and Switzerland. How did that work out? How do you guys get together and share a common belief system in a way?
I think value investing is a frame to combine this, and also the interest in really nerding about stocks.
Okay.
And the amount of people that really invest deep time into stocks and investing isn't that big in Germany.
Okay.
I think it's maybe a few hundred.
Wow.
I did connect some of them. It's not that, like, it depends a bit on how you count the professionals in. And you have the fund industry and the fund workers there, but the industry isn't that big. So it's a few hundred, maybe a few thousand, but then you have to, like, the pure people looking at stocks and investments, it's not that huge. And running investment firms, it's still tiny. So I try to connect people who are passionate about it, and started with different meetings in different cities. It's Frankfurt, Berlin, Stuttgart, Munich.
Wow.
Zurich, Cologne, Hamburg, and through Corona, it all went a bit to a different twist because we couldn't meet, so we did some online sessions and connected.
Yeah, it's great. I'm a big fan of how can I forget his name? Guy Spear. When I first read his book about 2 to 3 years ago, and he picked Zurich as a place of domicile to get away from the hustle and bustle of Wall Street. What do you see in the values that foreign, for the lack of a word, foreign investors that are not from Europe, non-Europe native investors that actually bring value to the investing community in Europe? Do they interact a lot? Like people like Guy Spear and all that. Obviously, he talks a lot with Monish, his good friend. But does he interact a lot with the the European investing community in your perspective and in your experience actually?
I don't know for Guy. I can talk for him. You have to ask him yourself. Maybe he's coming.
Sure.
The thing is, European investors are really drawn to the US. So most of them speak English.
Okay.
So you have this. That's also I went into English because you have many of them being able to speak English or even understand it. So there is a huge interest in the US, and we have a group of Germans always going to Omaha. There's a group of maybe it's 200 Germans or so going to Omaha.
Wow, the pilgrimage.
Yeah. So there is not that. Yeah, it's not that super German culture, and you have a bit of a more close scene in the German small and mid-cap scene. That's mostly German, but if you're having a fund that's not only invested in a German small and mid-cap scene, a friend of mine, he runs a fund, Felix Grode, I also did an interview with him.
Okay.
He has limited the investment amount in his fund to 40 million because that's the limit to be really able to invest in great companies and compound in the small and mid-cap space.
Yeah.
And if they are starting a new product with Europe, and it might get bigger, because in Europe you have more opportunities. With Europe, automatically you switch into the business language, it's English, so you have a lot of English-speaking people there.
After interviewing so many value investors, especially the guests that you have on your show are stellar. You know, a lot of guys there. I think MJ and I can agree. You know, these are guys that we really look up to. What are the common themes that you see recurring among these great managers? Actually, what are the things that recur? I mean, you see this particular habit or a particular style of investing that recurs among these great managers, from your point of view?
It's focus and being able to say no to many things. Like they aren't really interested to invest in all of the stocks that are global there, but they're interested in investing in a few great companies and really be able to increase the size of their positions to a certain extent. They have a high bar for quality, and they have a long struggle to find this quality.
I see.
And through the last years, there is a certain tendency to stick to. There's this one branch of really deep value guys that really stick to something that's extremely cheap, and then sell it if it's just cheap.
Yeah,
you could do this, but many of the more successful guys are into internet scale businesses. So businesses that are some kind of monopolies that have an unfair advantage, that are able to own a certain niche and have the scale economies they could share and give back, or just have the only asset set that allows them to be the leader of the pack in their region. So it's about using or looking for high rates to deploy capital and reinvest it at this high rates.
Okay. Sounds very very similar to what we have come across as well. MJ, any questions for Tilman? I'm pretty sure I saw. Yeah.
If we are towards the end, I really want to ask. This is a red light question. So, you studied politics. So, do you have a favorite German philosopher? And what football team do you support, if you support any at all?
I have a French philosopher I like very much, and I did use it in my studies. It's Pierre Bourdieu. He's a geologist and has philosophical influences, and is more as a geologist. And he gave a great theory for understanding society, which I could talk hours. I won't start it, but it really helped me to understand society and the dynamics there, and how fragmented it is, and what are power processes. And it also gives me a framework to analyze companies and give a certain emulation of what is happening there. Yeah, it was quite helpful for me, but it's to understand him, it's not that easy.
Okay,
he's really sometimes writing also. No, sadly not. But he's written so many books. He studied the housing market, the production of houses, what is possible there, and gives interesting frameworks which you could also use for general understanding of companies, how they're positioning to politics, how they're positioning to the financial markets and the cycles of the financial markets. And it's quite interesting.
Great.
If you think about society and the countries, how different structures in them are as well. So I think we could find a common language, even if you're from different countries, on financial things.
That's right.
And this language I even could find with some Germans. We asked these questions, like how many of my 10 friends from school know finance? And it's like, what language are you talking, guy?
Yeah, exactly.
So it's interesting how this structures are overlap, and how you could use it to analyze, and how fuzzy is it at the end.
Yeah. Yeah. Your favorite German football? Oh, don't say German. Your favorite football team, and it doesn't necessarily need to be German. But if it so happens to be German, then we're all ears.
I have a German football team. I still have the cards of some of the players there. It's SC Freiburg. It's a small
SC
soccer
Freiburg.
club with Christian Streich. He's quite funny as a trainer and is really like entertaining. And he's one of the longest trainers there. They are really long-term oriented. They also have a builder approach. Like they've built a lot of talents that are playing in the national team.
Yeah.
And they aren't like super financially oriented. Like soccer is a game where you make millions, but not as a club, but as a player, because the clubs don't really earn something big on this, because all it goes in the players' hands and the transfers.
Yeah.
But they are all financially sound. They have built a new stadium. They've made it ecological, and they have like nice, more or less nice fanship. Fans are always strange sometimes, but most people there are really funny. So it's a bit of underdog thing I also love, and that's why I'm trying to interview not only like the big managers that made it, the superstars, but like the emerging guys that are really good and work hard and bring great results. So yeah, that's my favorite soccer team.
But before we end, I think I have to ask you, because I'm a avid football fan as well. So, and the big criticism of the Bundesliga is that it's Bayern Liga. You know what I'm talking about? And there's the dominance is just so big that basically the other 19 teams are just supplying Bayern Munich with, it's basically the youth team for Bayern Munich. And like I was reading that day, I was surprised to find out that the second or third best team in Germany, Borussia Dortmund, actually is being loaned money by Bayern. Bayern's actually loaning them money. So I find it really interesting. And do you think that's good for, are Germans fine with that kind of structure?
If you maybe one hint, Borussia Dortmund also is on the stock market. So for investors who want to play for the underdog, it might be interesting to look for the stock.
Okay.
The thing is, if you think about the Spanish league, it's Real or Barca. So it's the twos. And in Germany, Bayern is really strong. But they also have their weaknesses sometimes. So it could be interesting who's becoming second or third or fourth or sixth. So there's a lot of competition in there.
Mm-hmm.
And the British league for me is a bit of hard as a fan, because if you want to go to the stadium and watch games there, you can't combine it with being a saver and
you need
a stock investor, because
you need to pay a lot,
and it's a lot. And in Germany, you can go there and pay like 20 euros for a day with drinks and beer and bratwurst.
I think like Arsenal is like 90 pounds or something like that per ticket, the basic ticket. So
in Germany it's like 10, 15, 20. So you can have watch great games and have this fan culture still. So it has different qualities, and the Brits really did good in the way they market it. It's really fascinating what kind of business they built. Like Bundesliga was a bit sleepy there, maybe, or maybe it doesn't work as a product that good. But if you go to South Africa or other geographies, it's Premier League. And maybe if you exclude Bayern a bit from this league, it's still interesting, because there's so much. Like Freiburg could also become third number. At the moment, we are second or fifth or something like this. We won some games, so quite interesting. And I think if you don't look at Bayern only, it could be fun. Yeah, let's say it like this.
And, tying in our conversation about the perception of wealth when it comes to Germans, I know there was a big, I think there was noise being made when, when Red Bull got with, I can't remember that team.
The F1 team, is it?
No.
Yeah, they have this soccer game in Leipzig.
Leipzig, yes.
Leipzig.
So it used to be
Leipzig.
just a Leipzig, right? And then they had the name, and then the stadium got renamed, and the fans didn't really like that. But like, do you see big corporations kind of coming in, like Red Bull, kind of changing names and to get more commercial spin? Is that like, do you think that's
We have
positive or negative?
We still have this already. Like, we have the first one is Wolfsburg. They are owned by Volkswagen. Then is Bayer Leverkusen is owned by Bayer. Bayern Munich has an investment from Deutsche Telekom and Audi in it. SC Freiburg is fourth. They are just regionally owned. They just have some corporations on the stadium with the name. Borussia Dortmund is listed, so they have investors behind them. Then you have Köln, Mainz, Union Berlin. They are independent. Then you have independent like Freiburg. Then you have TSG Hoffenheim, which is owned by one of the SAP founders. Then you have Red Bull, who's owned by Red Bull as a brand, or Rasenballsport, they say, but it's Red Bull. And then you have Bochum, Bielefeld, Stuttgart. Stuttgart is also subsidized by Daimler and Porsche. So, or I'm not sure about Porsche, but they have them as sponsors. So there is already the big money in the league. And maybe sometimes the second league in Germany is more interesting because they are like Schalke, Wolfsburg, Schalke, Hamburg, Düsseldorf, whatever players there. Also Hertha BSC, they have an investor who's put 50 million in it. So I don't really like this, but it shows, like, if you, as a Freiburg fan, it shows if you do good work, compound, build good talent, you still have an option to play from time to time under the top league. And you don't have to support the big clubs if you don't like it. And but it's still a business, and it's a business with a huge, with men who like to invest in it. And even with the Premier League, you have this talk about the CEO of Spotify, Daniel Ek, buying Arsenal.
That's right.
And you have some small mid-cap guys who buy soccer clubs, and there's men will, if they have money, they will move into it. So
even our Malaysian tycoons love to buy English clubs,
It's quite interesting. It's just like the modern pet. I don't know.
It's like a checklist lah. You've got your private jet, you've got your yacht. So next thing is either in the US, it's either a basketball club. In Europe or in Asia, it's either a football club. So these are the kind of pet toys.
US has this quite interesting way to distribute players in some leagues. I've heard about it, but in Europe we haven't found this way.
I think Europe wants it as well. If I have to guess.
I think with the interesting thing about Freiburg is they attract certain talents and keep them even. Like, we have some talents that play in we have two guys in the German national team, one guy in the Italian, some South Korean guys. So there's a certain niche if you put it in the right way. So there could be different stories written, but soccer is just like, you have 10 years and you want to earn the most. That's the game.
Right. That's right. I didn't even realize that 2 hours has passed. I thoroughly enjoyed this, and I wish we could go on, but I don't want to take up too much of your time. So where can people find you, Tilman? Where can people reach out to you? So talk about your website, talk about your channel.
Yeah, the website is good-investing.net. There they can find it, and Good Investing Talks is the channel. It's called. Happy to see new subscribers. I have a contact formula on the website. I also have this community running, so people can apply for it. I'm a bit picky with it, so it's more for people who already know something in the stock market. But feel free to watch my videos. And
do we qualify?
I think you would qualify.
We have to apply, John. We cannot apply.
No. So people can reach out to me and contact me there. I'm also on Twitter, Good Investing C. I think it's called. LinkedIn, whatever. On Facebook, I'm more private, so LinkedIn or Twitter.
Okay, LinkedIn, Twitter, or YouTube, or the website,
Yeah.
right? So we'll leave all these links in our comment section below. It's been an absolute pleasure, Tilman. Dankeschön. And
Gern geschehen,
we hope to probably catch you either in Berlin or either on another episode where we can talk about other interesting things in the value investing space. So
happy to help you. Also, if you might want to reach out to a guest, we can discuss this at a certain point.
Great. Thank you so much, Tilman. This is all for the FIRL podcast today. I hope you have gotten as much value and insights out of it, especially on the similarities that investing in Europe, financial literacy in Germany, as well as the good habits of focus that a value investor should have. So we'll see you all in the next show. Goodbye.
Bye.
Bye-bye. Thanks for listening.